The definition is very broad. I think a lot of companies will end up falling under this. And Dr. Marion said the justification was that if we end up enrolling a lot of new people in healthcare, then these companies are going to earn more profits, so they ought to chip in more. And he's correct. That was the administration's view on that. My response to that, of course, was that they're going to pay more under the corporate income tax. We've got a corporate income tax. If you earn more, you pay more. So we were already going to, the company's more successful. Uncle Sam does get a larger cut from them. When you have these specific taxes on life-saving drugs and innovations in medical technology and medical devices, like any tax, that creates a disincentive on creation of those items. At a time where I think every American thinks we need more advances in medical technology and pharmaceuticals. So I'm very concerned. Just as the penalty is designed to discourage people from going on without health insurance, I think this penalty on producing drugs and medical devices is going to be very problematic.
Can you give examples of medical devices?
Well, I think it's probably anything you see in the doctor's office, from the MRI machines and the tests and some of the new surgical things they're coming out with, and probably some amazing things that I, as a mere lawyer, can't even comprehend or think about in the future.
So regardless of complexity of the device, they still would be subject to the same type of tax?
It's a tax on the producers of them, not on the sales of them. And this is another thing that the Health and Human Services Department is going to be having to write regulations on. Washington being what it is, maybe we'll start exempting certain industries and certain companies. Maybe Congress will change the rules, but this is the road that we're now embarking on. It's a road that we're very concerned about.
Well, I just hang on that. So among these devices you might also think about are the ones that people have installed on themselves or carry around. So if you know someone with an insulin pump to treat diabetes, if you know someone with a pacemaker, those kinds of things.
Orleans, Indiana, Philip, Republican line.
Gentlemen, I have an income of 20,000 a year, the wife and I are 72. I understand that my wife's Medicare Part B will go up to $247 a month. Is that true? And I'm a veteran. I get my benefits through the VA. Is there any tax or penalty for veterans?
I don't think there's anything in particular that will hit you other than some of the other taxes that we've been talking about that that may be passed forward to you, such as co-pays and if healthcare costs continue to rise. But you can check out some of that stuff on our website. But as you defined it, you're already under two existing programs that weren't significantly changed under the legislation.
Nokomis, Florida. This is Joe, Independent line.
Hi, good morning.
Morning.
Mine is kind of a two-part question. It appears from the ads on TV that since the court passes based on the tax rather than the Commerce Clause, that there has been ads indicating that this is the largest tax ever placed upon the American people. And I wanted to get both of your guests commenting on whether that is a legitimate claim. And two, any guesses as to what their ads would have said if it were passed on the Commerce Clause?
Well, we hear different things on that. That argument is made quite a lot, that such and such tax increase is the largest ever, and that runs into how you define it. Are you defining it in there's an $800 billion tax increase? That's certainly a large dollar figure, maybe one of the largest, but in terms of percentage of the economy or percentage of the budget, there are tax increases in the past that are larger than that. So I certainly wouldn't make that claim. It might be one of the larger tax increases we've imposed on poor and low-income individuals or on the young, who are especially hit by the individual mandate. We've done a lot of work on the question of the taxes and penalties. We did a brief to the Supreme Court that on the question of whether it's a tax or a penalty that the dissenters drew from quite heavily. I've been very critical of Chief Justice Roberts' view or his ruling that it is a tax and not a penalty, because that has a lot of unanticipated implications for state taxes and for the definition of tax and fee, which is very vital to taxpayer protections. Things like supermajority requirements, voter thresholds. You need to know what a tax is and what a tax is not in order for those provisions to have meaning, and that creates a lot of problems.
Yes, I'd say that, so some people make the claim that the penalty that imposes the individual mandate by itself is the largest tax increase in history. And that's just not even remotely within hailing distance of reality if you focus on the amount of revenue that's going to be collected. It's quite small relative to many other tax increases we've seen. If, as Joe says, you expand it and you look at the tax increases in the bill as a whole, I would characterize it as being a significant tax increase. But again, if you go back in history, you can find ones that are bigger relative to the size of the economy.
Yeah, in World War II, we expanded the income tax. At that time, it was a tax that really only applied to high-income earners. In order to help pay for World War II, we expanded it to nearly all Americans. That's certainly in my view, would probably be the largest tax increase in American history.
David Dyer asked this, what about wealthy who prefer to self-insure? Must they buy insurance or pay a tax? Yes.
Yeah.
Clover, South Carolina. Reed, Democrats line.
Yeah.
You're on, sir. Go ahead.
Hello?
You're on. Go ahead.
Yeah, I'd like to find out about the insurance. How come it's going up so high?
Well, that's the trillion-dollar question. Why are insurance costs going so high? I think a lot of economists point at the deduction for employer-provided health care, and generally that we don't have a lot of price signals in the healthcare market. You go and see the doctor, you don't usually ask the doctor, well, how much does it cost? Because someone else is paying for it, be it your employer-provided coverage, or the VA, or Medicare, or Medicaid. And so we as Americans are not asking questions like that. There are possible reforms we can embark upon to try to encourage people from doing that, encouraging health savings accounts, for instance, but that's not the direction this bill went in.
Yeah, I think another way to answer that would be to say that if you look at the pattern of healthcare over time, what you see is that the prices of some services are going up, but in particular as well, the number of services that people are getting over time is increasing. And the combination of those two things means the cost of insurance has to rise. And one of the big concerns in the industry, or about the industry, is that, as Joe says, there aren't enough price signals there to encourage people to do care as effectively, efficiently, as low cost as possible. And as a result, you see kind of an accumulation of services provided. Providers are typically paid for providing more services, not necessarily for providing better care. And that those things over time accumulate to expensive insurance.
If you're joining us, we're talking about the tax provisions within the Affordable Care Act. Two guests to join us to talk through these. Donald Marin with the Urban Brookings Tax Policy Center and Services, their director. Joe Henchman of the Tax Foundation. He's their Legal and State Projects Vice President. San Antonio, Texas. This is Lorenzo, Independent Line.
Good morning, Pedro.
Morning.
I'm calling about the hospitals now that are downsizing. They're even merging. They had, every hospital got a 450 beds or 500. They don't need them. Now they only need about 100 beds because after surgery, you're out of the room in 3 days. After delivery, you're out of the room in 1 day. So we got a big problem. And also the Texas, or, the Sisters of Charity, Catholic hospitals in Oklahoma, they got a bill from IRS after a 3-year loss of $90 million, and they had to sell their business. I came down from Oklahoma to San Antonio, and by coincidence, the same amount was quoted, $90 million on a 3-year term, and they had to sell their business. I went to Laredo, Texas, also the same, $90 million in 2 years. You had to downsize, you had to sell it. So they sold out. And now you try to get some Sisters of Charity to do you good, they'll turn you away at the door. Any better?
I think it's examples like that are one of the reasons why Americans know that our healthcare system is broken and needs changes. My father works at a hospital also, and they certainly have stories like that there too. It's just a question of what we can do about it. I mean, there is something perverse going on at the state level, if I could talk about it for just a moment. The states actually are increasing taxes on hospitals because by doing so they can get federal matching funds from Medicaid, and then use those Medicaid funds to plug their budget deficit. So at a time where everybody thinks healthcare is getting too expensive and hospitals under a lot of pressure, we have states making it worse by imposing new taxes on hospitals because of how badly designed the Medicaid system is.
Donald, there are a couple of emails for both of you, actually. The first one asks, no one's told us exactly what the cost would be for families. If a family of 4 has an income of $50,000, would they qualify for a subsidy? What about a family of 4 with $25,000? At what cost do you not receive assistance from the federal government?
Are those at your fingertips?
I don't have those at my fingertips. I do have what you would pay on the mandate if you chose to go without coverage. So a family of 4, 50,000, you'd pay about $1,250 in the mandate.
So, and another email, under the Affordable Care Act, what happens to health savings accounts?
So there are some changes to health savings accounts. There's some limitations on what types of expenses you can pay out of them. They also apply to MSAs, to FSAs, flexible spending accounts. There's a whole acronym suite of accounts that are focused on healthcare, all of which have some restrictions now placed on them that in part raise some revenue to help pay for the bill.
Yeah, those have already gone into effect. I have an HSA, and I know a lot of people, especially a lot of federal government employees, have flex spending accounts, or FSAs. Those are certainly rather widespread, and you used to be able to use the money on those for over-the-counter drugs as well as prescription drugs, and now they're just limited to prescription drugs. Additionally, flexible spending accounts are capped at a much lower amount. I think it's about $2,500 a year. As I mentioned earlier, one of the problems I think everybody sees in the healthcare market is a lack of price signals